Hello, everybody. This is Noah and John, and we are from UrbanDigs. It is Friday, so you're going to get your weekly Manhattan market update, Johnny. It is an important one. We believe we have a narrative shift in this market. We did have sell signals for the longest time. I think we're going to our first buy side alert. That is not a full buy signal. It's our first buy side alert. Let's get into it and we'll talk about it. I'm looking at supply 6,696. Johnny, it looks like it's falling. Show me that chart.
Yeah, it is following us down 2.5% or so from the week before. And what's interesting about the supply trend is it's basically down. And that's what you see during the summer. You saw it last summer. You saw it, well, you didn't see it 2020, but you saw it 2019 too. So the normal trend of supply is in play, and that's down. And we're probably not going to see a reversal of that until what, mid-September, late September even.
Yeah, something like that, Johnny. That's right. Buyers expected this market was shifting. Other housing markets are seeing inventory rise. And we're not seeing that situation here. So buyers have to understand that the depth of whatever shift we had is going to be muted. It's going to be muted with what's going on with supply, what's going on with the rental market. We know pending sales is falling. Let's take a look at that. That's our measure of demand. 3,719, Johnny. Show me that chart.
Yes, the pending sales trend is somewhat interesting. Normally, it just sort of slides down during the summer. We saw a little bit of a pop mid-July, and it's kind of come back down. Sort of reverted to that downtrend, but they're holding steady. And it's important to note, Noah, that even though we've seen a real shift down in terms of activity in the overall market, the pending sales number here remains well above where it was in 2019, the last sort of
and that's
normal year.
Yeah, and that's a not right. 2019 is our last seasonal year that we're using for comparisons. It's a 9-month measure, Johnny. That's a 9-month measure. So we're including everything up until about December of last year. That's how this works.
Yeah.
We used to be 6 months. I would expect this to start to fall at a faster pace in about 3 or 4 more months. As we start to get into where the back end of the tail of this is now April and May. So maybe a little longer, you're going to start to see this number fall. So I think that's ahead of us. We'll see what happens. That could affect the market pulse. And speaking of market pulse, Johnny, I just want to talk about this for 1 second. Here is what the UrbanDigs market pulse looks like. And what's interesting to me is that we all know that we shifted, but maybe we shifted a little too fast, too quick, right? I'm not talking about prices. This is leverage in the market. And when I look at what the market pulse did, we already had the move down, bounced off those lows slightly, and we're stabilizing at a new higher level. So I'm just wondering in the back of my head, can we go out there and say, buy side alert, the first wave down is now complete?
Yeah, I think it's an early call. It's a nuanced call. It's sort of like looking at those, in drag racing, they got all those series of lights and the last ones are green, but it's like they get all these flashing yellow lights, or sort of at the flashing yellow light stage. You're like, hey, get yourself ready, because there things are happening in this market that might be percolating under the surface here.
Yeah, and I have another signal that's confirming this. It's not just the market pulse, and I'll show you what I'm talking about here, right? We go to the weeklies, we go to 1 month. Okay, I'm skipping the weeklies for just 1 second to make a point here, and you got 914 things. 914 things. But before I get excited about this number, I notice at the tail end that there's 121 things right at the tail end. That's going to get phased out in a couple of days. So this is going to fall back down, right? So imagine it's in the low to mid 800s, right? Low to mid 800s. We went from a pace of 1,1500 for the longest time to a pace of low to mid 800s. That's the reset. That's the reset. It's the 30-day contract sign. And when I go to my monthly contract activity, okay, this is showing you that fall. That blue line is showing you that fall. And what I'm here to say is that it looks like that blue line is going to start to stabilize. It's going to start to stabilize. And that is an important pivot from what the narrative was over the last 3 months, was shift, 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 actively falling. And now I'm like, okay, we've arrived. And now we're kind of going sideways. And that's what the data is showing me, Johnny. Let's go to the weeklies. Let's see what's going on there, because this is the slow time. Obviously, it's on the downside bias. Looking at supply, 195 things, Johnny. That's low. Show me that chart.
It is low, and this is what you expect to see this time of year. It's probably going to get even lower over the next couple of weeks, and you're probably not going to see a bump in that weekly supply number until, again, mid-September or so.
Yeah, exactly. And contract signed is falling with it, Johnny. 176, that's low right over there. We're going into the weakest calendar year. September is our weakest calendar year for deal volume. Johnny, show me that chart.
Yeah, but we're right on trend with 2019, the last sort of seasonal year. So contract sign is down. It's going to get lower, but it's on trend. It's not like it's fallen off the map. It's where it is in a normal market. I mean, that's kind of what we were saying over the summer is that this market's fallen, but it's kind of readjusted to sort of normal seasonal patterns. And it's going to be interesting to hear your take on those seasonal patterns in just a second.
Well, I'll tell you that the average for September historically is 687 contracts signed. If we take every September for the last 9, 10 years, it's 687 contracts. And if you break that up into a 4-week period, something like that, this pace right now is above. This pace right now is above the historical average of September. It's just the relative fall of what we're talking about here. And let's shift to the chart du jour. Let's shift to the chart du jour, which is exactly what we're talking about today. This 30-day contract sign pace number, right? What has that done over the last few years? And this is what that chart looks like. It's such a great chart in so many levels because it shows you the COVID destruction, it shows you the stabilization, it shows you the recovery, the peak, and how high we were and where we are now. But in my mind, the story of the day is the stabilization. We fell, Johnny, and now we're stabilizing at this level.
Right. So anytime you have a long-term trend, and this was, I don't want to say long-term, but it lasted for a good several months. I mean, anytime you get that trend start aberrating a little bit, start seeing those squiggly lines, well, that's when you should start paying attention here. And the other thing that catches my eye here, Noah, is that we put on these colored lines, right? Green, orange from the top, green, orange, red, and then yellow. Those are the lows of certain years. The green is how low that pace got in 2021, and the orange is so far the lowest point this year. And it's interesting to me how close they are, because even though contract signs on a seasonal level is now tracking far closer to 2019 than it is to 2021, that pace, as you mentioned, is still up there. It's still, this is still a very, very robust market.
Yeah, it's right back to where we usually are, and it's given the fact that supply is falling. When you put the pieces together, supply is declining. All right, deal volume is stabilized, even though it's lower, and the rental market probably rolling over a little bit at this point, according to the Gary Mallon podcast that we had that everyone should listen to. The rental market's still doing very, very good things. So you add that stuff together and it adds a floor. That's the point. It adds a floor to this. If I'm a buyer and I'm looking at this data, I'm going to have to start scratching my head saying, you know what? I was hoping for 10 to 15% to come down. I don't know if these forces are going to produce a market that is having fear levels high enough to do that kind of thing.
No, you're exactly right. And we're going to start seeing that play out over the next month or so as the sellers are going to come on early September, right after Labor Day. And then it's going to be the buyers second half of September, early October. We're going to have to watch those contract sign numbers to get a sense of, all right, yes, we've bottomed out here. It seems like we've stabilized. Are we going to bounce up from here, or are we going to track lower from here? And that's going to be the real question. And that's, a lot of what's happened in terms of the demand side has been a reaction to a shortage of inventory. I mean, inventory was coming on, but there's so much demand that it was just flying right off the shelves. And even though contract signs have fallen, that pace of contract signs has fallen, you can see that shortage still exists because there's far less things coming on. And so when you add in off market too, which is, something not a lot of folks talk about, buyers are still feeling the pressure. And it's going to be interesting to see how that plays out once this busy season, the fall busy season, starts in just about a month or so.
Yeah, it's right around the corner, and off market surging. And my guess is a lot of sellers going off market to relist in the fall, or to go to the rental market and see if there's a little better fruits of the nature of the rental market. The grass is always greener. But you made a really good point. Everyone should note this: October, November, right when things might start to pick up. The price action data is going to start to come out then. That's when we're going to find out how the shift was. And in my opinion, the shift, it wasn't 3, 4, 5%. That's kind of where I think we fell off the peak levels wherever we were 4 or 5 months ago, in my opinion. And if you happen to get some fearful seller in early July, right, when that market pulse was falling and the fear levels were higher and they hit a bid down 8, 9, 10%, you did great. You did great. So I think that's where we're at right now. We need to see more data before we figure out where we're going, either up, flat, or down from here. We will be all over it. John Walkup, thank you so much for picking up all this data. I am Noah Rosenblatt. We're both from UrbanDigs. Don't forget, you guys got questions. We have answers. Our forum is right down over here. If you want any of the reports that John whipped up today, they'll be right over here in just a little while. If you have never tried UrbanDigs before, give it a try. If you're a professional agent, 2 weeks for free. Other than that, this has been your weekly Manhattan market update. Catch you next time.